Hello everyone, welcome to my channel. I'm Rokon Alam, a CPA, and today I have a special topic that some of you has asked me to explain with some case studies, that is RRSP, Registered Retirement Saving Plans in Canada. So whether you are starting your journey in the financial journey or looking to refine your retirement strategy, I hope this video will help you. In this video, I'll explain the complexities of the RRSP and providing you with some actionable steps to master your retirement strategy. I'll try to give you some real life case studies. But before I started explaining what is RRSP and the other things, it's very crucial that the information I'm going to share with you, it's only for educational and information purpose only. As you know, Canada Revenue Agency changes taxes, so it's up to you to be updated with the latest rules and regulation by exploring the Canada Revenue Agency website or your financial advisor. I'll try to provide the updated information, but I cannot guarantee the accuracy and completeness of the information I shared in this video, and as such you cannot make me responsible for any actions you take based on this information. We'll be covering everything, as I said, from the contribution strategy to tax efficient withdrawals, some real life case strategies, and even I'll explore some useful resources to empower your financial journey. Alright, let's get started. What is actually RRSP? RRSP is a special investment accounts offered by Canadian governments to encourage citizens to save money for their retirement. Okay, unlike regular savings, RRSP comes with some unique tax advantages that can significantly enhance your long-term financial well-being. Okay, so what are the advantages? The primary advantage is you can defer the tax. What is deferring tax? It's twofold. Okay, when you first contribute to your RRSP, you can deduct that contribution from your taxable income for that year and potentially lowering the income on which you are taxes. For example, you have an income of $60,000 for this year, and out of the 60,000, let's say you contributed 5,000 to RRSP. So that means your tax will be calculated based on 60,000 minus 5,000, 55,000. Okay, and obviously when you calculate your tax on 55,000, your tax will be lower. So that is the one advantage you are having by contributing to your RRSP. So what is the second advantage? The investment that $5,000 you put in your RRSP will grow tax free. For example, if you are putting that $5,000 into savings account, or you put that money into some stock bond, so obviously if you invest that money into the stock bond, either you receive dividend or interest or capital gain, you have to pay taxes. But that $5,000, that investment has to be qualified for RRSP. So if you are making money on that investment, any interest, dividend, you don't have to pay taxes. This is called tax-free growth. So again, let's say you invested $5,000 in RRSP over the years, and let's say 5,000 becomes, let's say, 10,000 after 5 years or 10 years. So that additional gain or additional dividend or interest, whatever you receive from your RRSP, you don't have to pay taxes. So when you pay taxes, you only pay taxes when in your retirement, when you will withdraw money from your RRSP. And obviously when you are retired, your income will be low because you will not have any other source of income. Maybe you retired, you are not working anymore, so only sources of income maybe will be from RRSP. So when the income is low, obviously during your retirement you will be pay less taxes. Okay, so let's now talk about the contribution room and the limits. What are the contribution room and how much you can invest in your RRSP? You can contribute is determine the percentage of your earned income in the previous year, subject to certain limitations. So let's see, contribution limit, normally it's 18% of your income. Okay, if you earn, let's say, $50,000, so your contribution room will be $9,000. 50,000 multiplied by 18% is 9,000. So this represents the amount you can contribute to your RRSP in the following year. Okay. So now what about the unused contribution room and the carry forward? So the beauty of the RRSP is that if you do not use all your contribution room in that even year, the unused contribution carries forward to the future year. Suppose you contributed only 6,000 to your RRSP, but you only contributed $3,000. So the rest $3,000 is added to your contribution room for the next year. So now we also need to understand the penalties for exceeding the contribution limit. So if your calculated contribution room, let's say $10,000, but you contributed $12,000, the excess $2,000 could result in a penalty of $2,000 multiplied by 1%, that is $20 per month, until you resolve the issue with the CRA. And obviously CRA give you some room, the over contribution room, that is called $2,000 over contribution room. For example, if you contributed $12,000 and your calculated contribution room was $10,000, then your contribution, that $2,000, you don't have to pay any penalties. But as I said, always please talk to your financial advisor or an accountant to understand the strategies of investing in the RRSP. Okay. So now, when can you withdraw from the RRSP? You already understand that you can withdraw the RRSP when you retire, but there are two circumstances when you can withdraw your RRSP. One is called home buyer's plan. Let's say you decided to buy home and you want to withdraw from your RRSP. For the maximum withdraw is $35,000. Okay, $35,000. So you can also withdraw $35,000 and your spouse can also withdraw $35,000. Okay, provided they have already contributed to the RRSP, obviously. So total $70,000 you can withdraw from your RRSP to buy home. Okay, so this, and obviously you have to repay this amount to the CRA. Another withdrawal option is LLP. It's called lifelong learning plan. For example, you want to pursue a full-time education program that costs $20,000. So using LLP, you withdraw the required funds from your RRSP, allowing you to invest in your education without immediate tax implication. And obviously the repaying amount to your RRSP over time ensure the long-term tax benefit you plan. I hope you understand the basic of RRSP. Now I'll try to give you some case studies. Okay, so let's see. Let's say scenario, Mr. John, a 35-year-old professional, recently received a salary increase, okay, placing him in a higher tax bracket. So when you have more salary, you have to pay more taxes. This is Canada, okay. He wants to maximize his RRSP contribution to capitalize on immediate tax benefit. So how he can do that? So he decided to contribute a significant portion of his salary increase to his RRSP to reduce his taxable income and tax advantage of higher deduction value. John. So when you have a tax increase or when you have some money, provided you have some room in your RRSP, you can have this strategy. Now there's another case study I want to share with you. It's called spousal RRSP contribution for income splitting. And be careful, income splitting is very I should say dangerous thing. So you need to talk to your accountant before you do these income splitting strategies. So let's say Emma and James, a married couple, have significant income disparity. That means Emma, the higher earner, wants to equalize their retirement income and reduce taxes through spousal contribution. So what they can do, Emma contributes to RRSP spousal in James' name, allowing them to split income during their retirement and potentially pay less tax couple. So how do you do that? Emma's income, let's say $100,000, and James' income is $40,000. So Emma's spousal RRSP contribution for James is $10,000. Potentially tax saving result from James having taxable income in lower tax bracket during the retirement. So these are some of the basics of RRSP. So what you have discussed, so you understand the RRSP. So there are two advantages of RRSP. One is tax advantage. That means if you contribute in that particular year, your tax will be lowered, and also the money that is growing in the RRSP, it's tax free. These are the major two advantages of RRSP. And when you can withdraw the RRSP, only two times in your life. One is called home buyer's plan, another is called lifelong learning plan. Okay, in the home buyers plan, an individual can withdraw maximum 35,000, and for lifelong education is 20,000. But doesn't matter whether you withdraw or not. If you withdraw, you have to pay it back to CRA. Okay, as I mentioned, you have to be careful about your contribution limit. Okay, because every year when you submit taxes, CRA send a notice of assessment. In the notice of assessment, it says how much you can contribute, and if you want to know more, please make a comment. I'll try to make further video on RRSP, and obviously specific topics you would like to be covered in future videos, or if you have questions about today's content, drop them in the comments below. I love hearing from you, and until then, take care and have a good time. Bye bye.